Yo, what's up you guys? Welcome back to a new weekly market breakdown, and in today's video we are going to take a look at the market from both a technical as well as a fundamental perspective. And if you are new here, welcome to the channel. A sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please do consider smashing that thumbs up button, and let's try and get the video to at least 100 likes there as well. Now, a lot of people, first I want to say thank you for the people that had DM'd me on Instagram saying wishing me luck. For those of you that had watched the previous video, I had mentioned that I was going to go for a dental surgery, and that happened in the week, so I'm still recovering from that. I had my wisdoms actually cut out. That's why you can see I've not even were able to get a haircut there as well, so I am still slowly recovering, but we will get there. So without any further ado, let's jump straight into it. Just, again, thank you very much. Also, for the guys who had emailed me asking about the mentorship, I will get back to those emails throughout the course of this week there as well. Without any further ado, my good friends, let's jump straight into the information. Firstly, let's answer some questions. The first one got you sent by Rydal Fix. Sweet. The next one, hey there, I've been looked everywhere. Help on this. I kinda maybe now found the counter confused when the consistency rule starts calculating the trade range. So I've made a video on that. You can just scroll further down in the videos. I've made a video on how the consistency rule and the 50% rule there as well. Danko, Brian, I'm new here. Rydal keep telling us about Rolio Jack. Yo, that brought big time. Thank you. Jeremiah, can you please teach us how to use the Fibonacci? So in the videos, you'll find a video in here that basically educates you on how to use the Fibonacci tool as well. Bro, shout out to you. Thank you. Thank you to all the nice messages. Now, without any further ado, guys, let's go straight into the market there as well. Now, basically, I spoke to you guys. If you watched the last video I made, obviously forecasted this move for you guys purely based off the low reading in the CPI. We obviously anticipated the Feds to not hike the interest rates, thus weakening the index, and we expected this move to the downside. After every impulse, you expect a correction, and that is what we're going to look for in the dollar index going into next week, although the continuation is expected in the market there as well. Firstly, news from CNBC over here. This is basically a market closing on Friday. Says here the S&P 500 breaks the 6-day win streak on Friday, but still not its best week since March. We all know that the indices is negatively correlated with the index. So as the index weakens, you expect these indices to climb to all-time high levels. It says here stock slipped on Friday. Wall Street closed out as a huge week in which investors received a pause on rate hikes from the Federal Reserve, which is exactly what I said. So the fact that the Fed is not hiking interest rates, this weakening the dollar index, because it discourages investors to invest in a currency that doesn't have a higher interest rate. Because of this, the dollar weakens and stock and indices tend to increase in value here. There as well. So the S&P 500 2.6% up this week. Best performance for the since March. It says here it's the S&P 500's fifth positive week in a row, the first such streak since November 2021. So a very good week for indices, and it was good to see. However, the prices of gold also rallied on Friday. And we saw some slight corrections taking place as the dollar was recovering slightly on that pullback. So last week we had CPI, interest rates. If you missed it, just go check out that previous video that I have done. You'll see we forecasted all of this data, and from a technical perspective here as well, I anticipated this move to the downside last week Monday, and the market gave us exactly that. The Fed's paused the rate hikes. Now this week, what do we have? Powell's coming out to testify. That's the same as coming out and people asking him questions. What's going to happen in the market? Unemployment claims, basically like UIF in South Africa. Powell will testify again. And then we've got PMI and flash services PMI, and that will conclude the week for next week there as well. And these are all high impact news. Now, the first thing that we are going to take a look at is the dollar index. Now, what we can see here, the dollar index has just reached a strong level of, we call it support. This level over here acted as resistance. The market broke above resistance and is now back to test it as support. Right now, we do expect the dollar to correct itself because we know the market moves in waves. It makes an impulse, a correction, and then the next impulse. Now, here you can see the market printed a massive impulse, and after an impulse, you expect a correction to at least 0.382. And the way you do that is by taking your Fibonacci from the high to the low of the impulse. Now, you want to see which Fibonacci lines up the best with the structure in the market. And as you can see here, we do have a 61.8 that's lining up perfectly with this level, and this level over here acted as a level of support, and the market broke below support. All of that supports now once again turned resistance. Now, going into next week, we can expect the index to slightly correct itself. Although this is the level that we'd like to see the index correct itself, we also need to be very aware of this level that the market printed over here. Then if you take your Fibonacci from the high to the low over here, we can see that we do have a 0.382 pullback lining up with that structure there as well. I would say that I do expect the market to pull back to that level first. From there, we can always monitor the price action. If we do get a deeper pullback, then that's where we are going next. But we can expect that that green candles to pull through for the index going into next week. Next up, we do have the gold. Now, gold has not moved anywhere. I've been talking about gold so many times, right? And if you guys think I'm making all of these things up, if you look at gold over here, gold came into this consolidation phase. It was, let me just remove this, and gold came in here on the 19th of May 2023, right? The market's been stuck within this consolidation since May, and we're now in June. So it's basically been here for an entire month. Again, it's easy to say that we expect gold, to go higher or lower, but as long as gold is stuck within this consolidation phase, it's very difficult to determine the long-term outcome. So again, if you do get a break above that level, which I do anticipate the market doing now because of the Federal Reserve pause rate hikes, and I do expect the market to do that, but until we get a clear break of structure, can we not determine where the long-term momentum of the market's going to go? So I would say wait for a clear break of structure, and then from there you can then look for a long-term opportunity. Alternatively, if you do want to trade the range, you're more than happy to jump on a 1 hour, 2 hour time frame and trade this market within this consolidation phase there as well. Next up, we've got GER30, aka so the GER30 has been very, 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 very aggressive. And when I say very aggressive, I spoke about the market after it printed this W formation. I said we can expect that pullback to the neckline and then that continuation to the upside. I did not expect the market to go that high, but we are here now, right? And the market has got a lot of the room to the downside that it still needs to come in, fill in. Now this year, as you can see here, we obviously had that rejection that got retail traders excited to say that we expect this to be a continued move to the downside. The candle that's being printed right now, I do see it as being a fake out candle, and I do expect the market to come in, clear up whatever's left behind. And what I mean by that is if you go on the weekly time frame, right, the price action is playing out perfectly, right? Then you can see here the weekly close there, everything is playing out nicely. One thing I do want to stress about here is the monthly still has a pullback that is being expected over here, right? I do expect this level of resistance that got broken that is now turned support. At some point this market is going to dump down before it continues higher. Now I'm going to leave that there, right? Now if you go on the daily time frame, we are in bullish territory on the daily time frame. Why do I say so? Firstly, you can see the market printed resistance. The market then broke above resistance, right? Broke above resistance, and it's now back to tested as a level of support. Now, one thing the market does very well is you get the resistance and support. The market normally breaks above resistance, and then instead of coming back to test it as support, it will come and test support, then go up, then dump down, then do that, then go down. And I do think this is potentially another one of those you know, where you have retail traders that came in here who sold the market, had that stop losses up there. You know, you then got in your sell, the market then went, hit your stop loss, and then obviously we can expect this move to the downside. Now we can see the price action also here on the, on the weekly, sorry, was this the daily time frame?
Sure, I understand.
So
is there something else I can help with?
Sorry about that. So what we have over here is we got a level of resistance that got broken. So we do expect the market to come back to test it as support. We have this impulse. After an impulse, you expect a correction. If you take your Fibonacci from the high to the low, we have a 78.6 Fibonacci level that's lining up with that structure. Going into next week, I do see this market pull back to that level. And then from there, we can obviously continue to monitor the price action and see exactly what other opportunities the market has to present to us there as well. Next up, we've got US30. Now, US30 finally reached this level that I've been waiting for since last week. However, I do not think the market is done because we have this liquidity candle that we have over here. And if you go on to lower time frames, you'll see there is actually structure in the market that was created previously. There you can see, even if you go on the 1 hour, it will be a lot clearer. There'll be like candles that had printed over there, and if you go back, you can see there exactly. So we're going to go back on the daily time frame. Right now, the way I do see this, basically this market play out, is that we obviously got a market that's now trading in bullish territory. Why? Because the market had broken above very important structure over here, right there. Market broke above this level of resistance, and then came back to test it as support. There's no doubt that I do expect this market to continue higher going into next week, and then from there we can once again monitor the price action and then see what kind of opportunities we have in the market from there as well. Next up, we've got the Nasdaq 100. Now the Nasdaq 100 over here, let me just remove this. Now the Nasdaq obviously had reached this level that I had spoken about before. Let me just clear this here. So if you remembered here from a weekly perspective that we had over here, so we had this market that finally came to hit this level over here. Now this was the same high. You can see here from a week perspective, this market also has a lot of room to fall to the downside because this is the level that I expect the market to come back and hit. Now we're going to use this as a level of support because this level over here, that has the level of resistance. Market broke above that, then it needs to come back to test it as support. The market printed a massive impulse, soft an impulse. You expect a correction. And if you take your Fibonacci from the low to the high, we do have the 70 here, the 61.8, known as the golden ratio. That's lining up perfectly with that structure here on the daily time frame. Now from a daily perspective, we can see we have multiple structures that the market is faced with. However, we are retail traders. I do expect the market to dump to the downside going into the new week, and then from there we can obviously monitor the price and see what kind of new opportunities that we do get in the market. Guys, that is it from my side. Thank you for your time, and as always, cheers for ears.